But it is time for us to hit social media for our cash tag segment. For that, we'd like to welcome in Mr. Landon Swan, the co-founder of LikeFolio.com, and we have fast market contributor Jenny Horn with us as well. And you got some interesting stuff for us on Dollar General.
Dollar General, yes, a very interesting company right now. You'd be surprised. They have earnings tomorrow, pre-market, of course, and they actually had a 44% return in 2019. But what's more interesting is what they've done in 2020. So they've only fallen about 1.5%. And actually, an interesting stat I read was of 29. Okay, there's only been 29 stocks that have gained in the S&P 500 so far in the last month, and Dollar General is one of them. So it's kind of becoming this safe haven for investors amid all this coronavirus fallout. But more interesting enough, I thought it was so fascinating. They have 15,000 physical stores. So that's 3,000 more stores than Walmart. That's 12,000 more stores than Kroger. It's something of 13,000 more stores than Target. So it's actually bigger than Walmart and Target combined. So I feel like we don't appreciate the scale of Dollar General enough. It's bigger than its peer Dollar Tree and Family Dollar combined. I mean, it's enormous. I just didn't realize how many physical locations this company has, which I think is actually going to be a really good thing going into this, what we're seeing is this unknown period of time with the coronavirus. It seems like this is only going to be a tailwind for the company.
And if the market does slow down, if the economy does slow down, people are going to be looking for less expensive places to buy groceries.
Right.
That's one of them.
And people aren't going to be paying, I don't imagine, for delivery. It seems like that's an unneeded cost, especially for me. So this is a name that's very popular on Twitter right now, which is surprising, but it's very timely. So that goes into my first tweet, which says, "A rising tide does not life all boats. Family Dollar's comp sales fell 0.8% in fourth quarter. That's right, a dollar store chain is losing business. Ill-advised acquisition by Dollar Tree, thriving Dollar General really won by losing." So Landon, with of course Dollar Tree reported earnings last week, and Family Dollar is still being just weighing on the company. It's ridiculous, but Dollar General's, I mix these all up in my head, but Dollar General seems to actually be the winner of all these discounters. So Landon, when it comes to Dollar General, what are you seeing ahead of their earnings tomorrow morning?
Yeah, they were in a little bit of a war to see who could get Family Dollar, and Dollar Tree won, in air quotes, I guess you could say. But actually, I think that Dollar General was happy that they didn't end up getting them, because Family Dollar's been weighing down Dollar Tree badly. When we look at Dollar General, we can see why the stock has done so well. It's amazing to me that they're, I think, like $4 off their all-time highs when the market, you guys just showed the heat map. It's just unbelievably red. Dollar General is very safe. It has been, at least for quite a while. And you can see why. The purchase intent is very strong. This current quarter is up significantly year over year, I believe 17% year over year on purchase intent. And the current quarter is actually doing very well also. Now, that is coming off of a very, very strong purchase intent quarter last year. It is actually their highest same-store sales last quarter. So, I think that expectations may be really high. I know that the expected revenue is cracking the $7 billion mark, which I don't know that they've ever done before. So I know Wall Street's expecting a lot out of Dollar General. And I just worry that the expectations could be a little bit too high, especially when you look at, like this chart shows, you look at Dollar Tree and Five Below, they have sold off tremendously. About 25% for Dollar Tree since October, 30% or more for Five Below since October. Dollar General's flat in that same period of time. And when you look at the purchase intent among those three, they're all strong, but Dollar General is actually the weakest of the three. So it's been a safe place, but I worry that expectations in the stock price are just a bit too high here.
First, I feel bad for Phil Waba. He gets a tweet put on Fast Market, and he misspells his iconic quote. It's "a rising tide lifts all boats."
I was just reading what he was saying.
Yeah, I'm like, I feel bad for him. He misspelled his key part of the tweet.
He has an excellent point, though, so he had to be featured.
It was such a good idea that he had. Anyway, so this is, Landon, tell me if I'm wrong here. Follow me on this theory. If this economy starts to slow down, people are going to drift towards the discounters and away from the full price retailers. Isn't it just as simple as that, and possibly not get things delivered, correct?
I think so, and I think it also comes down to Dollar General's has made a conscious effort to decrease their reliance on supply chain from China. I know that they talked about a 7% decrease recently, and so I think that's obviously playing out very well for them right now. And I think so that may keep costs down for them. It may decrease their exposure to tariffs and all the virus concerns. And so I agree with you. If the economy does turn down, then people are going to start spending less, and they're going to go to stores like these. And I'm not a a professional macroeconomist, I don't think we're going to see a big downturn here. I think we're going to bounce back soon. But you're definitely right about that. But they'll still be competing with people like Amazon, Walmart, and Target. I mean, those are still cheap options. They're not super cheap, but unless we get into a really, really bad recession, I think they're still competitors for Dollar General.
American companies drifting away from China as a supplier. Don't get me started, Landon. So I think all companies should start doing that, but that's just my opinion. Let's move on.
Yeah, and I liked that he said that, of course, they decreased their reliance on China by 7%. But then I have to say, though, I read the report because it's from August of 2019. He didn't say the total percent. He was very careful to leave that out. So there is still that factor of supply chain, which is, of course, going to still be an issue for a Dollar General, especially when you have 15,000 locations. I mean, that's crazy. But, you know, I like the optimism, too, between both of you. So that's good. So our next tweet says, Costco is higher-end shoppers move in. Walmart, Dollar General, Dollar Tree. It's more of a recession and low gas. It's target demographics play. So Kevin, kind of like you mentioned, it has that recession-proofness. But I mean, does that even matter in right now's economy? Do you think this will continue? Do you think this even matters going forward in the long term?
Well, it'll be kind of a litmus test for the U.S. economy, right? If the U.S. economy still feels positive and confident and comfortable going forward, then the Costco's and Targets and Walmarts of the world will stay strong. But if not, this is a good test for how they're doing based on the numbers.
And Landon, I'm curious to know how Dollar General fares against the other discounters' happiness, because I know Five Below has been one we talked about that has crazy happiness, but you just showed us on the chart it's sold off lately.
Yeah, so as far as happiness, Dollar General and Dollar Tree are both right around 63, 64% happy. Five Below is 75%, dominating that field.
Wild.
I think it's just cleaner stores, better selection. I've been in these stores. I don't go often, but I have been in just sort of for market research, I guess you could say. And I tell you what, Five Below is more fun to just walk into. And I walked out with more product than I was anticipating. So it's a big difference. That 10 or 11 point difference in happiness is actually pretty significant, from 63 and 64 up to 75.
And Landon, on that though, aren't some of the discounters typically, the expectations are a little bit lower. You're not planning on going into the nicest store if you're going to a dollar store, but market getting a little bit of a bump on your just a short-term blip call there. Landon, market's rallying a little bit, but I have a question for you regarding this whole space, whether it's Five Below, Dollar Tree, Dollar General. You kind of made the comparison that, their purchase intent is actually the weakest, even though the stock's been the most resilient. When you look at this here, do you see opportunities comparing the three and establishing some type of a pair? Are you more of a buyer of the other ones, or are short this particular name? Or how do you look at this in terms of opportunities, given everything that's going on and what's going on in this space?
Sure. So in this kind of market, I like to be market neutral as much as possible. So I would lean towards a pair trade, if anything. And based on the very high stock price and the fact that this thing is just so resilient, I would probably be a little bit bearish going into this report. We saw a very strong quarter last quarter from them, both in purchase intent and same-store sales, and we're not seeing this quarter match it. So I'm a little concerned there. I'd probably lean bearish on Dollar General, and you can take your pick between Dollar Tree or Five Below, or maybe do half and half to pair it off, because purchase intent on both of those is absolutely booming, and the stocks have sold off tremendously. So if you're a value-type player like I am, I would probably lean towards a bearish position on Dollar General and bullish on Dollar Tree and Five Below. Kind of keep it even so that you're market neutral. I don't like market exposure right now.
All right, Landon, well said. Great stuff. As always, we'll see how the rest of the day shapes up and what Dollar General does report. But thanks to Landon, thanks to Jenny.